In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, bounce back after a volatile week filled with virus fears. U.S. stocks end the week with a bounce back. The president signing an $8 billion emergency spending bill as the worldwide count of coronavirus cases tops 100,000. Plus, inside the social network, we will sit down with author Stephen Levy to talk about his unprecedented access to Mark Zuckerberg and Sheryl Sandberg in a new book and Facebook's path forward. And sanitizer spike. Third-party sellers on Amazon are jacking up the prices of hand sanitizer, masks, and wipes. What the tech giant is doing to crack down on illegal price gouging and stem the panic. But first to our top story. Thousands of passengers are waiting in isolation right now on a cruise ship off the coast of San Francisco and waiting for the results of coronavirus tests. Meantime, the city of Austin has canceled South by Southwest, a giant technology and music conference, completely. The markets, however, have regrouped. U.S. stocks staged a furious rally in the final hour of trading that cut in half a rout that reached 4% and left the S&P 500 higher after a tumultuous week dominated by fear of the spreading coronavirus and fears that will upend global growth. To give us a better picture on today's moves, we are joined by Bloomberg's Mike Regan. So, Mike, why the surprise turnaround today?
Well, I don't think you can really pin it on any sort of news catalyst or anything like that, Emily. It's sort of indicative of what we've seen the last few weeks in that just wild swings both to the upside and the downside. And that's kind of normal when this much volatility, this sharp of a correction is introduced into the market. You often see just unexplainable moves both higher and lower. But as we close out the week, it is interesting. Tech ended the week higher on the week, about half of a 1%, as did the S&P 500, up about 0.6 of 1% for the week. So there is a little bit of solace to take into the weekend that we've held above those lows that we reached last Friday. But another Monday is another day, and it's not going to be too surprising to see some more wild swings next week.
So then what's the message that investors are taking away from this? Is it buy now, buy the dip, or do nothing, given that in an hour the entire circumstances could be different?
Yeah, I think there's a lot of opportunistic trading, a lot of speculation on sort of intraday swings. In the tech space, what's really interesting is there are some stocks that are doing pretty well because people are looking for companies that can sort of have solutions for problems coming up. If there's a big amount of people working from home, for example, Zoom Video, the video conference stock is doing pretty well. Teladoc Health, which actually allows doctors to interact with patients over the internet, is doing great. It's up like 60% this year, actually hit a record today. And the big one a lot of people are talking about is Citrix Systems, which obviously the VPN stocks that allows employees to remote into their work computers. That stock's been doing pretty decently this week because of the assumption that a lot of people are going to be working from home.
Zoom has been doing well, but actually closed the day way down 8% on the back of some misplaced, perhaps, expectations. All right, Mike Regan, thank you, as always, for giving us the update. Sticking with the markets, I want to bring in Laura Kane now, head of America's thematic investing at UBS Global Wealth Management. Laura, what are you telling your clients right now?
Sure. I would say the number one thing is to not panic. When we've had these periods of volatility in the past, but at the same time had pretty strong underlying economic fundamentals, we've actually seen that equity markets do quite well over the following 12-month period. So while we don't know how long these virus concerns are going to last, we do believe that there is solid fundamentals underlying the U.S. economy and that this situation should at some point resolve. In the meantime, one thing that we've been trying to do is to emphasize to our clients that there are some longer-term secular growth stories that they can invest toward now at attractive entry points, and are stories that will play out regardless of what happens with the coronavirus. So,
what are those stories?
Sure. So an example of that is this continued trend toward accessing more services online, whether it's online retail. We've seen a surge in use of online medical platforms, education platforms, platforms. And we think these trends are going to continue. And the coronavirus, if anything, is kind of shedding more light onto these underlying stories.
Meantime, you've got Amazon employees working from home if they work in the Seattle area, which is, has a cluster of coronavirus cases and deaths. Here in Silicon Valley, you've got Twitter employees now working from home, some Facebook employees working from home. Obviously, these companies depend on technology and connect the world without physical contact, but you have to wonder about the loss of productivity. What does this mean for tech companies the year ahead?
Sure. I mean, I would say that across the board, we're going to see companies adjusting their operations to cope with the virus concerns and to make sure that employees are safe. So we're seeing this in technology, but also in financial services and in other industries as well. As far as the tech sector overall, we are positioned underweight at this time due to what we see as stretched valuations. And also, we see that in this kind of risk-off environment, the more cyclical areas of tech are selling off. So that's actually not one of our preferred sector right now. And instead, we're preferring to take our bets in the communication services area, where you still get some of those tech-like opportunities in terms of internet services, streaming content, and things of that nature, where the valuations just aren't as stretched.
Sequoia, the venture capital firm, sent a letter to all of its entrepreneurs, the black swan of 2020, they call this. They say they're already seeing, in especially some of these privately held companies, revenue declining, missing targets, telling these companies to be adaptable, be willing to change course. What about on the private market side, where we have less visibility, but there's a lot of money backing these companies?
Listen, I think the main thing to keep in mind, whether it's public or private, is that this situation is something that we think is going to prove temporary. We don't know how long or quite how disruptive the situation will be, but we would emphasize that it's not necessarily the time to completely veer off course and to kind of completely change the thesis for some of these companies, whether it's public or private. So it's really not a time to be making fear-based judgments, even though that is a natural instinct when facing this level of uncertainty.
All right, Laura Kane of UBS, thank you so much for joining us. This as we're continuing to get more news on these cancellations across the country. South by Southwest, the big tech art music festival, has officially been canceled. As I mentioned, Sequoia Capital is calling the coronavirus the black swan of 2020. How bad can it actually get for both big tech and startups? We're going to talk to one investor next. This is Bloomberg. U.S. stock volatility continued today on fears the coronavirus, which now has more than 100,000 cases worldwide, will continue to spread. Tech did finish the week higher, but today, software companies like video conferencing platform Zoom and the messaging app Slack saw record drops, these two among tech stocks that were expected to benefit from the virus outbreak, which has led more people to work remotely. For more, we're joined now by Ilya Fishman, partner at venture capital firm Kleiner Perkins. Meantime, Kleiner is launching a brand new fund in the middle of all of this. So we're hearing a lot of gloom and doom predictions here. How much doom do you predict there will be?
Well, first, thanks for having me. Excited to be back.
Good to have you back.
At first, we take the situation very seriously, especially because people's lives are potentially at stake. We also don't really have the full picture yet. So the best thing that we can do really as a community or everybody is to be prepared. And so we're advising our companies to do two things. One is work from home as much as possible. So you mentioned Slack, Zoom, these are household names now, but there are products like Loom, Figma that help people collaborate and work remotely. And most companies are fairly distributed these days as well. So doing more of that helps prevent. And two, from a long-term perspective, generally speaking, we tell all of our companies to be prepared for an up market or a down market, to know what the levers are in their business, to know how to react, whether to contract or expand and step on the gas. And that's just really good, prudent advice, I think, for any firm at any time.
Why would Slack and Zoom be suffering right now?
Well, I think there's generally volatility. I think there's a lot of uncertainty, and I think the uncertainty is really the key issue here. I think it's all a question of time until we see more data.
Sequoia, one of your competing venture capital firms, just released this big memo saying they're seeing growth rates drop at portfolio companies, telling companies to be adaptable. They said, quote unquote, it'll take considerable time, perhaps several quarters, before we can be confident the virus has been contained. It'll take even longer for the global economy to recover its footing. Would you agree with what they're telling entrepreneurs right now?
I think high-level sound advice. Again, there are some businesses that are going to be impacted more than others. Companies with supply chains, especially in affected areas like Asia, will definitely take a hit. More digital businesses, I think, have a bit of a buffer to react. And really, I think our message is take precaution, stay calm, and prepare for both the best and the worst.
They're comparing this to Sequoia's RIP Good Times memo in 2008, the height of the financial crisis. I mean, would you say it's that bad, or is that an exaggeration?
I think it's an open question right now. I think it's hard to tell. I think if you look at various levels of analysis, it could be bad, but it could also not be as bad. So again, the best thing we can do, prepare for the worst, but expect the best, and just stay calm.
Same time, Elon Musk tweeted in the last couple of hours, the coronavirus panic is dumb. Reaction, please.
I think my biggest issue is there's a lot of sensationalism. I think what we should do is, again, take precaution, follow the methods that people outline, no more handshakes, work from home, and monitor, because what we don't want is we don't want an overreaction.
Meantime, you have $700 million to invest. If you think about it, companies like Airbnb and Uber were born in the financial crisis. So how do you find those opportunities in the midst of all of this uncertainty? Or will there be opportunities?
Look, now is probably one of the best times to be in venture capital and in tech. It's easier than ever to start a company. The quality of entrepreneurs, the quality of businesses we're seeing is better than ever before. There's just more capital. There's more data available to these companies. And when we invest in enduring companies. So you mentioned a couple of companies that have been built over a decade. If you look at the historical giants like a Google or a Facebook, they might have also started in some low times and then endured over multiple decades. And it's these enduring companies and businesses that ultimately persevere and persist through ups and downs. So we try to find those independent of where we are in the macro cycle, because that's pretty hard to predict.
What's your exposure in China right now?
So we had a few funds in China. At this point in time, with Kleiner Perkins Fund 19 and really with 18, we've gone back to our roots of focusing on early stage in North America predominantly, across a few core sectors like enterprise, consumer, hard tech, fintech, and healthcare.
So no more China funds?
So for now, we're keeping an eye, we're watching it, but we're back to the basics of early stage venture capital.
Now, as you mentioned, Kleiner's had 19 funds. 19 funds, and
19
there's a long history, a long and storied history. You are part of the new Kleiner. A lot of folks have left and a new guard has come in. How would you describe the new Kleiner?
So when we raised our first fund as New Kleiner, which was Fund 18, our sort of motto was back to the future, because really back to the basics of what made Kleiner Perkins great in the beginning. It was a small team, technologists who were focused on helping people build companies, very fast at decision making, and really hyper-focused on stage, early stage, so seeds, A's, B's, sectors, enterprise, consumer, hard tech, fintech, healthcare, and just really heads down helping people build their businesses.
Kleiner did have a lot of prominent women who have since left. You don't have any female partners, as I understand it. What's happening there?
Yeah, amazing history of amazing partners, whether it's Mary Meeker, Beth Seidenberg, or Lin Chao, and Eileen Lee, and many more. So we care about diversity very deeply, and we want to bring in and have people inside the firm who represent the diverse audience of our companies. All of us as partners have been groomed and kind of brought up inside of venture firms, and we actually have an amazing next generation. We have Annie Case, Monica Desai, Josh Coyne, Hao Miao Huang, who are the next iteration of the Kleiner Perkins team. And actually, we're excited in this fund cycle to promote Annie, Monica, and Josh to principal. So we deeply believe in both grooming from within and being thoughtful about bringing in from the outside.
So there will be women in the new Kleiner.
There are women in the new Kleiner.
So, we don't know what's going to be happening in the next hour, as I say. How does that work for you as a venture capitalist when you have to make decisions now, but you're investing for the long term, but there are so much uncertainty right now, macroeconomically?
Our business is to be in uncertain markets, again, because the enduring companies, the amazing companies, they really persevere through ups and downs. And I think it's the fundamentals like amazing entrepreneurs, big audacious vision that's a bit contrarian, a massive opportunity. And I would say that the opportunities today are bigger than they've ever been before. If you look at Square or a Shopify or an Atlassian or a Slack or a Zoom, these companies have gotten to tens of billions of dollars, market cap in a very short order, much faster than their predecessors. So now is actually pretty amazing time to start companies.
All right, Ilya Fishman, partner at Kleiner Perkins, thank you so much for joining us, especially with everything going on in the world. Good to have you.
Thanks for having me.
Okay. Coming up, price hike, how Amazon is attempting to fight off third-party sellers spiking products tied to the coronavirus. That is next. This is Bloomberg. A jail cell at sea. That is how some passengers in isolation are describing a cruise ship off the coast of San Francisco while they wait for their coronavirus tests to return. This, as new cases of the virus are popping up here in the Bay Area. Some schools and offices have been closed amidst the possibility of exposure. We're joined now by Bloomberg's David Baker, who's been monitoring the situation here in the Bay Area. What is the latest on the cruise ship? I know we're waiting for those testing kits to come back, but they have not come back yet.
You're waiting and the passengers are waiting too. They were supposed to come back this morning. That's what we heard yesterday. The latest, I just got a notification a few minutes ago from the state health department saying they hoped to have an announcement later today. So we'll see if they actually stick with that.
The state of California has declared a state of emergency, as has San Francisco, LA. What happens when they get the results? Are those passengers going to debark here in San Francisco?
That isn't known yet. The state and the federal authorities are trying to figure out where they can bring these people ashore in an environment where they can keep the people who may be infected away from the rest of the population and get them to a hospital quickly. That may very well end up being in San Francisco, and the city is starting to prepare for that. But that decision hasn't been made so far as we know.
Meantime, there have been cases popping up. Are they connected to this ship's passengers? Because there has been a person who died who was on this ship, a previous leg of the cruise. He came ashore and later passed away. Are the cases in the Bay Area linked to that?
They appear to be. There are at least 8 cases around the state that we've tracked so far that are linked to the last voyage of the ship. It docked here in San Francisco, left on a cruise on February 11th. And since that cruise came back, a number of people who were on that ship have started showing symptoms of the disease. And they're scattered around the state, too. We've had them up in Placer County, up in the foothills of the Sierra. There are several here in the Bay Area. And there was a gentleman who died here in the Bay Area yesterday who had been on that ship, and they're checking to see if he had coronavirus. He died after emergency medical crews went to his house and tried to revive him. It's not known if he had the disease yet. But
meantime, we're getting some headlines from the White House. The president saying he would be inclined to leave these quarantined people on the ship. Your reaction?
I think they need treatment. Wherever they are, they need treatment if they are indeed sick. We still don't know for sure that anybody who's on that boat right now actually has the virus.
All right, David Baker, thank you for continuing to follow that story for us. The president at the White House making those remarks, and we're also waiting on the vice president to speak from the White House in the daily briefing about coronavirus updates. Meantime, sticking with the virus, Amazon is attempting to stop third-party sellers from price gouging. Items like cleaning supplies, hand sanitizer, and other virus-killing, virus-fighting products have spiked in price due to high demand. To discuss, we are joined by Bloomberg Tech's Matt Day, who is in Seattle. And Matt, you don't have to look very far to find Purell for $200 on Amazon. So how well is Amazon actually doing at swapping down these third-party sellers for price gouging?
No, it's really hard to say. I mean, like a lot of things on Amazon, it can be a little bit whack-a-mole. Amazon has said they've taken down tens of thousands of listings. They say they've suspended some sellers wholesale, but if you go and look it up right now, you could probably find some instances of price gouging. I think part of this just speaks to, again, the difficulty of policing these largely automated online environments with a ton of independent sellers. It's just a hard thing to get a handle on.
Meantime, eBay also fighting this. They've actually banned things like hand sanitizer, masks from the platform completely. Why are they taking a different approach?
Part of the difficulty here is there aren't really, in a lot of states, hard and fast rules for what qualifies as price gouging. In some cases, it's limited to food or gasoline or essential items. Hand sanitizer isn't always on that list. So it's very much, if you know it when you see it kind of thing. I think that's leading to a little bit of the split response, between Amazon, eBay, OfferUp, Craigslist, and all the other companies that host independent sellers online.
Meantime, Matt, Amazon itself has an employee who tested positive for the coronavirus. That employee went home sick on February 25th and hasn't come back to work. Amazon has also told its employees in the Seattle area to work from home. How is Amazon navigating this crisis as they're supposed to be helping get supplies out to everybody across America?
Yeah, and it's unclear how hampered Amazon's logistical operation is going to be, if at all, by sort of the work from home mandate here at its Seattle headquarters, or option rather, I should say here. We've definitely seen some folks going to work. Some people are still physically around at their Seattle headquarters, but like a lot of companies up here, they're definitely winding down their physical presence. One thing going for Amazon and a lot of tech companies is in many cases roles can be remote anyway. Video conferencing exists. We all have smartphones attached to us, so. At least to the outside, they've portrayed that things are business as usual, and we haven't have any real reason to question that so far.
Microsoft has also told its employees to work from home across the pond from you in Seattle. Give us the view from the Seattle area right now, where there's another cluster of cases, and we have seen the majority of deaths that have actually happened here in the United States out of that nursing home in your state.
Yes, public health officials midweek really started to recommend that if companies' employees can work from home, that they should start thinking about that and start doing that. And we've really seen that wind down start in the last 48 hours here. It's not a ghost town by any means. There's still cars down on the street as we speak, some folks walking around, but it's definitely thinned out, particularly at the major employers who have big HR departments that are taking this seriously and responding as public health authorities say that we should try to limit all of our contact and presence in large groups of people.
So, Matt, what's the story that you're following over the next few days as the situation changes by the hour?
Well, I think a lot of it is, we're all kind of healthcare reporters here, kind of regardless of our day-to-day corporate hats. I think they're still trying to get a handle on the senior care facility that you mentioned. Just in the last 24 hours, authorities said 15 more patients have gone to hospitals. So we still don't know the full spread of this in Seattle and King County. I think that's all of our priority right now, is trying to find out that story.
All right. Well, thanks for coming into the Bureau to talk to us today. Bloomberg Tech's Matt Day in Seattle. Coming up, the inside story of Facebook. We'll talk to Stephen Levy about his massive new book detailing an insider's look at the rise of the social network. That is next. And if you like Bloomberg News, check us out on the radio. Listen on the app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Facebook, the social network that CEO Mark Zuckerberg says is supposed to bring the world closer together, is starting to feel the effects of the virus itself that is forcing the world to stay apart. Shares of the tech giant falling in trading today as Needham cut revenue and earnings per share estimates, reasoning that advertising in some of its biggest markets is at risk as consumer spending slows down due to the coronavirus. This as Facebook closed its doors in London until Monday for a deep cleaning after a Singapore-based employee who had previously visited their London bureau tested positive for the virus. Joining us to discuss this and much more about the social network is journalist Stephen Levy, who is the author of a brand new opus on Facebook called Facebook, The Inside Story. Stephen, always good to have you here on the show, and congrats on the book.
Thank you. It's always great to be here.
So look, analysts saying we got to start with the bigger story, that Facebook's ad business is not going to stand up to this crisis. How well positioned do you think their business model is right now if there's a massive economic slowdown?
Well, their business model is fairly well positioned. Everyone's going to be taking a hit from this thing. But when advertisers decide when they have to reach someone, Facebook is one of their few choices to reach mass audiences through the internet, and through mobile phones in particular. So I think that they're going to suffer like everyone else, but time and time again, we've seen that no matter what the other problems Facebook is having, it's the ads that keep driving up, and up.
So you started this book in 2016 before
Yes.
the presidential election had happened. At that point, you had to pivot massively because Facebook suddenly became, as you called it, the most reviled company in the world. How did you turn your reporting process 180 degrees?
Well, fortunately, it happened pretty early in my research. I started researching this book at the end of the summer of 2016. I actually went to Africa, to Nigeria with Mark Zuckerberg. And it was interesting because it turned out I was witnessing peak Facebook. His popularity was never higher. Even though Facebook had had issues in the past and problems and criticisms, it was skating by all of those. And it was a beloved company. And then with the election in November 2016, things took a turn, and everything that people didn't like about Facebook, they learned more about, and there was a series of scandals culminating in Cambridge Analytica. So it actually was fascinating during most of my research to watch all these things happening, and it refocused what I did, weirdly in a way, to look much more earlier into Facebook's history, because I really wanted to find out the roots of what went wrong. And I was able to dig up a lot of stuff that people hadn't seen before in retelling the early days of Facebook.
Now, a lot has been made of you getting unprecedented access to Facebook employees, to Zuckerberg, to Sandberg. It makes for some incredible color, but you wonder about if that access came with a level of bias towards the company. And how do you respond to the criticism that this isn't the inside story, this is Facebook's side of the story?
Right. Well, there were no strings attached. Facebook didn't see the book until a couple weeks ago. I dropped off a finished version. Too late to change anything, Mark. And I think if you're writing something about a company and wanting to get the full story, how would you turn down the ability to talk to the people and get it from their lips? Now, I've been a reporter for quite a while. I know when I'm being spun. And it wasn't just Facebook people I talked to. I talked to all the people I would have spoken to if I were doing a story from the outside. So it was pure benefit.
Now, you do a lot of getting inside Mark's head. And I'm curious, after all the conversations you had with him, what is your conclusion? Is he somebody who sort of accidentally stumbled on world domination and is consistently surprised by the negative consequences of it? Or did he intentionally seek out that kind of power, that kind of domination, and now revel in it?
Well, he's a person who, to put it mildly, likes power. You know, in his early youth, he played Civilization, a game where you dominate a world. He loved the game of Risk. And he played the college market when he first started the Facebook in 2004, like a game of Risk. He went from college to college, to campus, taking it over. And then when he had Facebook, same thing. Actually, the world was his risk board, and as he went from country to country. I don't think that precludes some idealism, but it was sort of a mix of saying he believed that Facebook could be a force for good, but he was definitely driven by competition and power, and and the kinds of things that would drive it out there to overlook things in terms of warning signs that they came up. So he blew past those warning signs, and that's on him.
So is he naive, or is he just in this ending quest for power?
I think sometimes he tries to cite naivete, but I don't buy it. And I even said that to him, at one point, saying, I'm not taking the we were just kids in a dorm room excuse. He came to Silicon Valley, got in touch with some of the smartest people in the industry. They funded him. He hired great executives like Sheryl Sandberg. So you can't call that naivete. They just prioritize growth higher than they prioritize being careful on how they grow.
Your portrait of Sheryl Sandberg is a little less flattering. You give her the space to air her emotions, the opportunity to talk about how horrible it has been to be criticized, but you also make it clear that she cares an awful lot about her image, and that a lot of that is perhaps more calculation than accident. And I would ask the same question, how much is it accidental, or how much is it intent with her as well when it comes to power?
Well, she's a complicated figure. You know, as I said before, a super accomplished executive. She did a lot for Facebook, but she was, in fact, in charge of the parts of the company where the big problems came up after the 2016 election. And some of those problems didn't get to Mark Zuckerberg until it was too late, and it should have happened earlier. So in those emotional moments that Sheryl had, I think she felt that she didn't meet her own high standards, and she has high standards in the workplace for people who work for her. And she is concerned with her image. That's just a fact. Recently, I think the photographs of her engagement found their way an exclusive arrangement with People magazine. So she cares.
It's 2020, and the last thing they want is a repeat of 2016. And foreign interference isn't the only issue. We've already been talking about the rise of sponsored content and the ability to pay influencers to post on Facebook about political candidates. Political ads, they're dealing with how to manage those. Where do you still see vulnerabilities in Facebook's platform, and are they really ready for another U.S. election?
Well, they put in tremendous effort into trying to fix the problems of the last election, but those same kinds of vulnerabilities exist now, and the adversaries that people are going to try to game the system are thinking 4 years ahead. So it's an open question whether Facebook will be ahead of them in nailing it down when some of the fundamental problems exist, mainly that false content can exist on Facebook and not violate its policy in certain ways. So I think there's going to be problems.
Is Mark Zuckerberg still the right person to be running Facebook?
I don't think there's an alternative. Two words I've never heard at Facebook during all the people I talked to are succession plan. He controls most of the stock, voting stock. No one can vote him out. I don't think he's going anywhere.
What about Sheryl Sandberg?
It'll be interesting to see. She told me that she originally only planned to spend 5 years at Facebook. So
right. She told you she would take an appointed political position, but it wasn't a good time to leave.
Yeah, so she's maybe playing on house money. Who knows?
So the story is not yet finished. Will Facebook go down in history as one of the most admired companies or one of the most reviled companies? And will we look at it as net good or net evil?
I covered Microsoft during their antitrust travails, and now we love Microsoft. It was once, reviled in its way, and the CEO, who we were once in love with, got, scored a lot, during that episode. So I think it is possible for a recovery, and maybe it takes some fundamental rethinking, and maybe the next generation of leaders might revive the reputation. Facebook itself, especially with its properties like Instagram and WhatsApp, is not going away.
Well, a recovery is one thing, or is it just another tech company? Because someone say, Microsoft, though certainly it's seen that the stock has soared, it certainly doesn't have the
trillion-dollar company.
The cachet that it did, back in the day.
Yeah, I mean, Microsoft's $1 trillion company now. That's more than Facebook.
All right, Stephen Levy, always good to have you here on the show. The book's out now, Facebook, The Inside Story. Coming up, the engine behind Uber, Square, and DoorDash that's changing the way people pay for stuff. We're going to hear from the CEO of Marqeta next. This is Bloomberg. Breaking news, we're going to head straight to the White House where the vice president is giving his daily briefing on the coronavirus. Let's listen in.
That being said, we're continuing to lean into this effort in full partnership with state and local health authorities around the country to ensure that we do everything to prevent the spread of the disease, to mitigate its expansion, and to provide necessary treatment to Americans that have been impacted. But first, let me turn my attention, before we speak about some of our broader efforts and hear from some members of the task force, to an issue that I know is on the hearts and minds of people across the country. The Grand Princess cruise ship has been moored off the coast of California since Wednesday night. I want to commend the efforts of our Coast Guard that heroically flew coronavirus tests to the ship, and we received those results. Working in close consultation With Governor Gavin Newsom and the state of California, we have developed a process for addressing our findings and resolving the circumstances facing Americans and people from around the world and the crew on the Grand Princess. First, the results. Among those tested, 46 persons were swabbed. 21 of those on the ship tested positive for the coronavirus. 24 tested negative. One test was inconclusive. Again, let me say 21 individuals on the Grand Princess tested positive. Among those were 19 crew members and 2 passengers. And it's important to note, yes, among those positive for coronavirus were 19 crew members and 2 passengers. It's important to note that the Grand Princess actually was on its second tour, and we know of coronavirus infections from the first tour as well, with very, very difficult results. In the wake of these findings today, we've been working through the day with Governor Newsom and his administration through their unified command efforts in California, CDC and HHS, and we have developed a plan which will be implemented this weekend to bring the ship into a non-commercial port. All passengers and crew will be tested for the coronavirus. Those that need to be quarantined will be quarantined. Those that require additional medical attention will receive it. But let me assure the American public, as we did so with Americans returning from China and those returning from the other cruise ship, we are taking all measures necessary to see to the health of the Americans and those involved on the Grand Princess, and just as importantly, to protect the health of the American public and prevent the spread of the disease through communities in this country. We are instituting the strongest testing protocols to ensure that not only those on board receive the treatment that they need, but that the American people can be confident that there will be no erosion in our preventative measures in efforts to keep the coronavirus from spreading throughout our country. I want to express our gratitude to Governor Newsom and the state of California for their full partnership, not just in dealing with the Grand Princess, but throughout the advent of the coronavirus. California has been a strong partner. And as I just told the governor a few moments ago, we will continue to work very closely with his administration, and we will continue to put the health and safety of America first. With that, let me turn my attention to the issue of testing, which has been much in the news of late. And the president spoke about it just a few moments ago at the CDC. It's very important to note that because of President Trump's decisive leadership, that the risk to the American public of contracting the coronavirus does remain low. But nevertheless, in Washington State, where I visited yesterday with members of our team, and in California, we have seen, as Dr. Fauci often describes, a community transmission. Still less than 200 cases across the country, and the good news is most Americans who've contracted this disease are being treated and recovering, and on the road to recovery. Sadly, we all know of the loss of life, and we grieve that along with their families. But the American people deserve to know that we are ready, and that because of the president's leadership and because of extraordinary efforts by CDC and Health and Human Services and our partners in state labs around the country, we have the testing necessary to be able to provide tests to all the states that have requested it. As I said yesterday, we've been able to provide tests to all the state jurisdictions and labs that have requested it, and I'm pleased to report that all state labs have the test And now, because of the change that President Trump implemented at the FDA a week ago, now state labs can actually conduct coronavirus tests themselves. Beyond that, between March 2nd and 5th, we distributed more than 900,000 tests across the country, including 200,000 that could allow 75,000 individual patients to be tested. As the Secretary of HHS just described, by tomorrow another 200,000 tests will be shipped, and by the weekend another 1 million tests will be shipped around the country, with the expectation that at the end of next week 4 million tests will be shipped. We've been able to respond to the request of states that have been impacted by the coronavirus. But as I said yesterday, to meet future demand, this week the President brought together the leading commercial labs in America and asked them to, in effect, partner with the United States in developing tests for the American people. And I'm proud to say that just in the last 24 hours, LabCorp, Quest, two of America's leading commercial laboratories, have announced that tests will be available by Monday of this week. The reason that's important, the reason that meets future demand, is because the enormous capacity of these commercial laboratories and others in the country are precisely how we will make coronavirus tests available for your local doctor, available to your pharmacy, and broadly available to the American public. Tomorrow,
Vice President Mike Pence there in the White House briefing room saying the passengers on the cruise ship docked off the coast of San Francisco right now that their testing kits have come back. 21 people on the ship have tested positive, including 19 crew members and 2 passengers. The plan now is to bring that ship into a non-commercial port. He did not say which port or what the location is, and he said that all of the passengers now, and there is, I believe, about 3,500 of them, all of them will be tested, and the folks who need to be quarantined will be quarantined. It certainly leaves open the question of what those who potentially test negative, where those folks go. We're going to continue to monitor this briefing and give you more headlines as we have them. More of Bloomberg Technology coming up. The plumbing engine for tech companies to make payments easier. That is how Marqeta describes itself. The payments processor powers big names like Uber, Square, DoorDash, and it also prides itself on being the first new card issuing platform in 20 years. Joining us to discuss what makes Marqeta so different is CEO Jason Gardner, who is the latest guest in our Retail Transformed series. And retail is probably being transformed at this very minute, given all of the news happening in the outside world now. You know, what is the impact you see on payments, on retail, of a potentially huge macroeconomic slowdown?
Well, Emily, thank you for having me. There's an incredible amount going on in fintech. The heart of fintech today is, in a lot of disruption, is Uber, DoorDash, Instacart, Firm, and Marqeta is at the power of that, at the heart of that disruption. So there's a lot going on. There's a lot of flexibility at the point of sale. There's a lot of different ways to pay, whether it's devices or cards. We're also seeing point of sale finance with companies like Affirm and Afterpay. And it just really changes how we're going to be purchasing at the point of sale. And especially today, we're going to see probably a lot online, for sure.
Can you talk about where you are in the stack?
So we are what referred to as a modern card issuing platform. So companies come to us to build Visa or MasterCard payment cards, whether that's consumer use cases, commercial use cases, and we power those physical plastic cards, tokenized cards that fit in Apple Pay or Android Pay, or virtual cards.
So where do you see, there's been a lot of innovation in payments, and it's a lot of it is behind the scenes. Like we don't necessarily see it.
Right.
We just click a button and things happen. What is the future of payments innovation?
Well, today we have a $45 trillion card market globally that's moving to $80 trillion in the next 10 years. There's an incredible amount of disruption going on. And 5 to 10 years ago, nobody was really talking about or even investing in fintech. And you see really the last 5 years, the amount of companies that have been grown and flourished, whether have gone public, multi-billion-dollar, decacorn valuations, and it's been incredible. It's absolutely a global phenomenon, and cards is truly at the heart of that, and that's where we live as a Marqeta.
You're a San Francisco-based business. We were just talking about this cruise ship that's coming ashore. This is sort of a new cluster of cases here in the Bay
Yes.
Area. How are you handling this internally and with your employees?
Well, we're all in uncharted territory now. We have told our employees to stop domestic travel, to stop international travel. If you live with somebody who's elderly or you have a suppressed immune system, stay at home. We'll get you what you need. But for right now, again, we're in uncharted territories, and we'll see what happens. But we're taking an abundance of caution with regards to how we're handling the situation.
All right. Well, thank you for being flexible and going with the flow
That's
with
okay.
us
Thank you for having me.
today. Jason Gardner of Marqeta. Appreciate you stopping by.
Thank you.
And that does it for this edition of Bloomberg Technology. We're live streaming on Twitter. You can find us there. You can check us out at Technology and follow our global breaking news network. Quick take on Twitter. I'm Emily Chang. This is Bloomberg.